Hey viewers, welcome to today's session. Today is 1st of February 2025, the day of budget announcement. It's a big day, and as usual, we saw a very volatile movement in the index as well. But very surprisingly, if you see, Sensex ended very flatly. There has been no change. There's a change of only 5 points. It's like virtually there hasn't been any change, but that doesn't give you the whole picture. If you just pull up a 5-minute chart of how the day was, you could see that the index went all over the place. So there were big moves that happened, many hundreds of points, the very opening, and then it came back, and then it consolidated within a narrow range, and again around 12:40, pardon me, 11:45 time, there's a big drop from around 77,850 all the way till 77,050, 800 point down move within a few minutes. But again it went up, then again it came back down, and once again it went back up, and it did a local maximum of around 7700, and then it closed around the 77,500 mark towards the end of the day. So it's almost closing where it opened, but at the same time we did make a lot of move within the day on both the sides. So that's how the market was today. And typically when this happens, there is not much of a net move. It means your volatility has decreased, and that's what we see here. The India VIX index losing substantial value today, minus 13%. And if you just look at how the VIX saw the volatility change within the day, opened at a maximum of around 16.5, then went all the way down to 15.5 around the noon, and then again it came down all the way till 14 towards the end of the day. So it was a very big contraction in the volatility, and typically in such days you will benefit by selling, not by buying. If you are buying, then there'll be contraction, the volatility, premiums will decrease, meaning you incur a loss. However, if you're selling, then you're netting the premium. So it's a day for people who are doing a short and not going long. But let's see how our day fared and what all trades we took for the day. Let's look at the orders section, and let's go one by one what we did since the very morning. So about an hour into the market opening, around 10:15 a.m. So we took a long position, and we bought two strike prices, two options we bought. One was a call and one was a put at the same strike price. So it's a long straddle. That's what I entered. So the reasoning was budget would be tabled around 11 in the morning, which meant just few minutes before, about 45 minutes before I took this long positions. I was hoping there will be a big sustained move on either side, and that would ensure that premium at least on one side would increase, and I would be profitable. And this is not a baseless assumption. There have been cases in the past, if I recall 2021, with on the budget day, when I was involved in active trade on that day, there was a big sustained move on one side, single side, and that kept on going for thousands of points within a single day. And it also happens on the election days and the days of the election results. So it's not that uncommon to expect something like that happen. That's the reason we entered a long straddle, but at the same time we didn't put up too much of capital here. Even though our account value was big, we entered only one lot. We only bought one lot on both the call and the put side. So a total combined premium of 1,310, or total deployed capital of 26,200 within this one trade. And we had a stop loss of 10% for the same reason. And the thought was, I would just watch out for next few minutes, probably an hour or so. And in that time, I'm not getting profit. If I get a profit, I exit at 10 or 15% profit. But if I do not get a profit, it's not yielding substantial return, or it's hitting the stop loss of 10% or an absolute loss of 2,600, then we would exit. So that was my definition of stop loss, risk management, and that is what I took. It's very essential, guys, because in a market where volatility VIX is falling 10%, 13% within a day, your premiums are going to crash, right? You don't take positions which are, don't take on positions which are making a loss. You don't try to average them out. You don't try to be very stubborn and stick with them just because you assume it works. You made an assumption, it didn't work out, but it cut your losses short. That's what you do, right? And it helped us by setting this a tight stop loss of 10%, right? Because if you see around 11:35, which is like 80 minutes an hour and a half after we got this position, right? Our stop loss was triggered in the very morning itself, right? Just half an hour after the budget announcement has started, the premiums kept crashing down. VIX kept coming down, and all of a sudden we were at a loss of 2000. We were at the max loss of 3200 at some point of time, but I was able to exit with a loss, a smaller loss of around 2600. So if I had timed it properly, I might have exited with a smaller loss of around 2000 rupees. But it's still fine, right? It's more or less the same. We cannot time the market. But ultimately, it was a really good thing that we did, because if I just go to the portfolio section, then just to close positions, you see, right? 7700 C and P, correct? So at the close of the day, the combined premium has been 234 plus 410 or 644, 650, something around 650, right? While our combined premium at the entry was 1300, at the day's close it was 650, a 50% decrease, right? So 26,000 was our entry point. We would have been a net loss of 13,000 if we had just stubbornly clinged on to this position. So which is why it's very essential, important that you have very strict definition of a risk and stop loss. So well and good, that's what there's one position that we entered, and we started off February month with a rather big loss, because we usually short straddle and short strangle, and usually we need multiple trades to recover this loss of 2600, right? So if you see, call went up by 1500, but put came down by more than 4000, and that's because decrease in volatility in the VIX. So or a net loss of 2600 points here. But fortunately, as the markets would have it, just after booked a loss and exited this position at a rather small loss when compared to the end of the loss, right, which was around 11:30. So just a few minutes later, around 11:55 and 12:05 and 12:10 time periods, right? So once again, the volatility temporarily spiked up, it shot up, and because volatility shot up, I very quickly took on a short strangle position now on very far strike prices. So this has been our core of the portfolio, right? One of the best performers of our portfolio, it has been the short strangles of fast strike prices. That's what we did today. And because temporarily volatility spiked up, VIX went up, so did the premiums of the fast strikes as well. And if you see 74,000 PE, right, which is like 3,000 points or more than 3,000 points, are almost like 4.5% away from the current spot price, right? That far away, and still the premium was 45. Can you believe that? That was the premium, 45. This is the Tuesday expiry, and today is Saturday. This is a special day because the markets are open because of the budget, but otherwise we still got about 2.5 days when we enter this trade, but it's still like 4 percentage points away, right? It's still far away, but still there's a very high premium of 45. So we sold one lot on the put side, 74,000 P at 11:55 a.m. and minutes later we sold one option on the call side at a strike price of 80,100 C, which is another 3,000 points, roughly 3,000, 2,800, 3,000 points away from the spot price at that point of time. And again, you see it's a big premium, 53, and it was possible because there was a spike in volatility around this 11:50, 11:55, 12 p.m. time frame, right? And just few more minutes later, 12:13 time frame, so we were able to sell another lot on the call side for 67. Though at the same time I placed another sell order on the put side as well, 74,000 P, and I probably rather was wanting to sell at a very high premium. Maybe that's the reason. Yeah, that's the reason the order didn't get filled. But so be it. So here again, I'm not going to take credit for this. We were lucky. I was lucky that there's a spike, very big or huge spike in the volatility, which ensured that we got a higher premium, right, when we sold the far strike prices. So net, we have sold 2 lots on the call side and 1 lot on the put side. Since then, the index kind of remained range bound through the day, and it ended flat around 11:55 when the index went down a significant points. That's where 77, 200, 152, 200. That's where we sold 4 strikes on both the call and put sides. And we just held on to it until the end of the day, and volatility decreased even further through the day, and we're looking at a very good profits on both the call and the put strike prices. So there has been a very sharp decrease in the premiums there, and because we sold, we are making a profit. And also given the fact that we have two lots on the call side, so where we made a loss of around 2600 2700 in the very morning session itself, enter a short triangle, and that's ensure that we still end the day profitably, some green. So that's the power of a short triangle, and that to combine with a very volatile day. So I'm still carrying this position overnight because I still got some good leeway, more than 3%, 4%, that much leeway we have with the 2 days to go to expiry. So let's see. If possible, I may want to exit an excess unbalanced call position that I have the first thing in the morning, and so that I make this a balanced short triangle, and then thus release the premium, or rather release the margin requirement, and probably take another trade which is safer given the time that is left in the last 2 days or day and a half. So that's would be my plan. But for now, so net you wouldn't see much of a difference. Plus 315 has been a total return on the budget day, but it was not a smooth sailing. So we incurred a loss of almost 3000 in the morning, and thanks to the high volatility. So in the first place, the volatility worked against us. Then we quickly saw, let's make volatility our friend, and we took an opposite trade. Instead of buying, we shorted, and by doing that, high volatility ultimately came down further, and which meant whatever the loss we made in the first trade, we were able to recover all of it by the short triangle position that we took later in the noon and persisted till the end of the day. So let's keep a watch on how things would play out from now on the next Monday, coming Monday. There's still a day in between Sunday. What would happen over the weekend, how the investor sentiments would play out, and how the market would react to it on Monday and Tuesday. So I may want to exit these positions completely. I don't see a huge premium left for me to still cash out. Probably I should have done it by today itself. We made a really good profit, and we're almost like extracted 85-90% of the premium that's available to us. So knowing this is going to be a post-budget session, though it is 4.4 percentage points away from the spot, we still got 2 days. Anything crazy can happen. So I might have liked to kind of at least exit one of the positions on the call side, but yeah, there you have it. We'll see what we can do at the open of the Monday session. And just before we wrap off, we'll just look at how the volatility had a different story to tell throughout the day. So we took the long position, the long straddle around 10:14, 10:15 time frame, and we held it until where the VIX was around 15.85, 15.9, and we held it until 11:35 time period where the VIX had come down to 15.4, and our stop loss, rather tight stop loss of 10% was hit. We exited, and then around 11:50 12 time frame, right, with the VIX was still around 15.5 to 15.2 levels, we sold a call and a put at a very fast strike prices. We had entered into a short triangle position, and after that the market just couldn't have a very sustained move in one direction, and that meant VIX just kept crashing down from there on. It hit a low of around 14.5, and it tried to recover a little bit, but couldn't sustain, and it went further down from there and the end of the day at nearly 14 point levels. So that's the reason we were able to recover a part of the losses we made in the morning through this one trade of short triangle that we took, where we made volatility our friend. As simple as that. But it's still fine. It's not a mistake that we did going long in the morning with the long straddle. It's not something we would do every now and then, right? It's not an adventure we take every now and then. We did it because it's a budget day, an opportunity that comes once or twice a year, elections and budget stuff like that. Typically you will see a big move happening on either side. So that was not the case today. Markets can prove you wrong, right? So but at the same time we knew it could go against us, so we didn't risk a lot of capital. Our position was like, only one lot, 20,000, 25,000 is a total deployed capital and a rather tight stop loss. So once again, my dear viewers, so if you look at all, if I kind of summarize our approach today, right? So we are very clear about not losing big. So I repeat, we are clear of losing small, right? We're very clear to lose. If you're losing, our losses will be small, right? And we will adapt ourselves according to the market situations. So because it was more or less a trending, it's not a trending or a directional market. We ensure that whenever there was a spike in the VIX, the volatility, we turned net sellers, right? We shorted, we entered a short triangle, and that helped us recover all of the losses, and we are in a net positive zone. But that also means the remainder of this month we got to look out for more opportunities. Now with the mix coming down, our premiums are kind of dried up. We may not get very high returns through short triangles as well, but we need to ensure identify the trades where market conditions are conducive to our strategies, and that we'll keep doing through the rest of this month. So for now, it is a day with a lot of learnings to test out our strategies and our assumptions and thought process, and as well, most importantly, our trading methodology itself, right? So in order that you remain profitable in the long term, you do not lose money, right? And when you do lose, you ensure it's a small loss, and that's the reason why we are still in the positive, and not just about it being the positive, but we are good on the path of long-term profitability. If not, just imagine this 13,000 loss, right? If you hadn't exited this position, or worse, if you were trying to average it down further, your losses would have compounded, and it's not easy to recover from a big loss like 15,000, 20,000 rupees, right? You will spend entire months, one or more months, trying to make that much money, and if you lose that much capital within a single trade, then it's not how you go. You got to fix your max loss in a single trade to probably some 10% or 20% of the total profit you have made so far, right? It doesn't completely wipe out all the profits you have made. It should be less than 10% ideally of all the profits that you have made so far. So don't risk more than that. If not, you'll end up spending a lot of time just to recover the losses. It's not a good thing to do when you want to be long-term profitable. So that's how today was, and let's look out for the next week what it has in store for us. Once again, thanks for watching.